What's up, everybody? This is going to be an impromptu video. I did not plan on doing this, but I've been getting a lot of questions about the things that I have been posting on my Instagram, basically about the setups that we've been taking. As you all know, I review pretty much all my trades, the plans, the setups, all on my Instagram. If you're not following me on there, I definitely recommend clicking the link in the description below. It'll redirect you to my Instagram. It's a good resource and you're missing out if you're not following it. But I've just been getting a lot of questions about why I've been coming up with certain levels. And I want to break down a few recent setups and trades that I have taken, that we've taken in my Discord community, to go over my thought process, why I created the level, where I entered, where I stopped out, where I exited, just breaking this down and debunking this price and volume strategy. So the first setup I want to go over is on March 7th, which was Tuesday of this week you're watching this video. And I got a lot of questions about where I came up with my 4053 red line up here. That was a key level of sellers. Now this 4053 level, if I use the search feature in Discord, has been on watch pretty much all of March, all the way into late February. It's been in a key level that I keep saying, 4053, area of sellers, which I expect to be tough resistance moving forward. Multiple days for the past 2-3 weeks, we've come up with 4053. At one point, it acted as a level of support, and other points, it's acting as a level of resistance. This then becomes a key level for me. So I just highlighted it and made it purple now, and this formed back on January 31st of 2023. And if we look, this area, and pretty much I would say 75% of my levels do come from the tape itself, by watching the orders come into the market and understanding the auction via order flow or via support and resistance that have been tested multiple times, that have proved to cause a reaction. I don't care if I come up with a level and it doesn't cause a reaction, because at that point I'm just going to remove it. However, if I have a level on my charts and it keeps causing a reaction every single time it has been tested, then I'm going to leave it on my charts, because it serves as an important inflection point in the market that's going to give me clues about the next move or about the auction process. On February 1st, we came down, bounced off of 4053 very well, and rallied. Moving forward, the same level about 2 weeks later, we sold off into it. It acted as support, and we got to move off of that as well. Now, a few days after that, on the 21st of February, we hit this level, we consolidate, we fail to really break below this, and then we open up. The market wicks at this level, and again, we find sellers at around 4050 to about 4053, and this was on the 21st of February. Then, most recently, on the 3rd of March, we get a very strong rally up, close right at our 4053 level. The following day, we break above it, get a semi-nice little rally off of that, and then the overnight session on the 7th of March, we consolidate, and it acts as support. So this level has been on watch for a while now. Every single time we test it, we either break it hard, we either rally at it, close at it, it's support, it's resistance. It's just an important level of interest. Now, what's interesting is on Monday, to start the week, on March 6th of 2023, we opened above this level, nice buying volume. We get a strong rally that runs out of steam, meaning buyers rallied the market higher. They failed to find value at higher prices. We closed lower, and we closed right at 4053. Now, what's interesting about this day is if we zoom out a little bit, what we're going to see is two rallies. The second rally over here above our level fails, and we basically form this trend. And how I view this is someone's basically peeking its head above resistance. And if you peek your head above resistance and you're getting whacked in the head with a baseball bat by a seller, that's a red flag, and the market may want to test lower prices to test if buyers are buying lower. This is what I mean about market structure and understanding the context. So now the pre-market plan on the 7th of March, the day we tested 4053, we were watching a few things. And one thing I want you to notice from this plan was I did not really have a bullish plan or a bullish bias because of what I just said about basically a seller whacking the buyers at the high and they ran out of steam. We basically triple topped the day prior near the high. So the plan, scenario number 1 and 2, was leaning more towards the bearish side, and I couldn't really come up with a bullish plan, still below that supply zone that formed the day prior. So scenario number 2, very straightforward, very simple, was 4053 to about 4037 is a general area that I want to gauge the market. Is selling heavy here? Are equities weak? Is the VIX strong? How is the tape looking? If these all points lead to weakness, then I want to play short inside of this range, targeting 4021 demand, and then depending on the pressure, it can bring 4,000 by end of day. One thing I want to highlight here, I've made plenty of videos on this in the past, was I need a where component and I need a when and why component. I've primarily been using order flow as a when and why component, and I've been using levels that form based off of order flow, supply and demand zones, or just key levels of support and resistance as my where component. I need these two components to formulate a valid trading plan. So now when the market opens up, it's my job to read what the auction is doing and gauge the participants at my 4053 to 4037 level. So now the market opens up. Here is 4053. I kept it as the purple line. Multiple different times we rallied into this level and failed. At the same time this is happening, NASDAQ is showing signs of relative strength. NASDAQ rallied about 60 points at the open, yet the S&P 500 was failing at my key level. So now what I want to do is I want to wait for buyers to run out of steam on an intraday level, especially combining with the NASDAQ and the S&P 500 at my 4053 level. Tesla was also very, very weak, and this supported this downside move. And at 9:55, I updated the Discord. I said Powell is testifying in 5 minutes. I am seeing some early signs of weakness here, but that may not matter when he begins talking. I said I've entered an S&P 500 short at 4052. My stop loss was above 4056, and I was targeting 4037. I did say it was very, very risky because Powell was speaking, and we don't know what he's going to say and the reaction of the market because of that. However, the point I want to make here is if you put risk on the table and you see something that you like, and as long as it fits your risk management perspective and you see signs on the tape leading to weakness, take that setup, put risk on the table. You're never going to have a reward if you don't put risk on the table. So now I'm short here at this yellow oval. My stop loss is about 4 points higher, and I'm really targeting this green line at 4037 demand. Then a few minutes later, with the help of Powell, we get that sharp decline in price, and I sell 90% of my position following my plan at 4037, and I have 10% remaining, and I get out around 4028, the remainder of my position. Now, reviewing this chart, yes, I left money on the table. But when we get a sharp decline in price like this with high volume and off news, especially a riskier type of play, I'm taking risk off the table when I can get this little 16, 17 point sell off in a 3-minute trade. And then the market continued to sell off all day. And on Tuesday, it was very, very weak. All day, no bids, lower lows, lower highs. We hit our 4,000 target according to the pre-market plan. And this is simply coming up with levels, reacting to what the market provides at them, and managing my risk and entering accordingly. Okay, so if you were following my Instagram on Wednesday, on March 8th, I posted this screenshot of the intraday commentary tab in the Discord, and I got a lot of questions asking where did my 3977, 3970 level of support come into the play, because we bounced off of it multiple different times and worked out very, very well. So the simple thing here is this is not levels I'm creating after the fact. This is all real time, understanding price and volume. So at 9:40 a.m. Eastern time, I said 3977 to 3970 is my level of support. Buyers want this level to hold, and obviously if we broke below it, we had demand lower. That would have been a bearish plan. All my levels could be support, all my levels could be resistance. I gauge what the market does at those levels. I go with the flows of the market. What happens if we come into a support level and selling is so heavy? Am I going to take the market long there? Absolutely not. This is why you want to gauge the auction at the levels of interest. So where this 377, 370 level came into the play was very simple. From March 3rd, last Friday, the day of that larger rally into that 4053 level, this little consolidation over here, I love to see consolidation before a rally up. I love to see basically the calm before the storm. The market consolidates, it builds value, it builds volume before some external force brings the market higher or lower. So this area right here around 3980, 3977 is just a general area of support, of demand, an imbalance of price that once caused the market to be balanced, and then we get an imbalance causing the market to rally from there. However, what I did was I go into smaller time frames now, and this zone was very, very small. So technically, we are supposed to draw the bottom of this zone to 3974, which was the pre-market low of this consolidation. However, the zone was very, very small, and it just, when I see a zone of 4 or 5 points, for me, it's not valid enough. So what I did is I looked back to the previous day auction. We have this little consolidation range, which is where that 3953 level came from. But what I did is I lowered this zone to 3970 because we have a little consolidation area from this range right here. So I essentially combined it into one. If you were to look at the charts today, what I'm going to show you, we technically broke 3973, this pre-market low. However, I lowered it to this little consolidation range right here because technically there is consolidation, which basically bleeds or leads off of this overnight consolidation. So this is where I got 3977, and honestly, looking back at it, it should have been maybe 3978, 3979 if you want to get really technical with it. But then the market opens up, we get a very, very large sell-off at 10 o'clock into 3977, 3970. And if you are watching the tape, this is what I mean about using order flow and understanding the auction with buyers and sellers. You are going to see very aggressive selling come into the market at 3977. You're going to see 1,800 lots by 600 on the offer at 3977, showing aggressive selling. You're also going to see 1,600 lots hit the bid. Yet there is zero liquidity, which hit the offer at 3976. So this is showing there is a very aggressive seller selling into the market, high volume. We could see that on a horizontal basis, yet the market's not moving lower. If you see this in a very short-term perspective, I mean, this is in a 30-second, 20-second perspective, you're not going to be able to see this on the charts. All you're going to see on the charts is a move down, a wick lower, and high volume. But if you're looking at price by time, or you're looking at the orders coming into the market, you're going to see an area that there is non-acceptance, indicating a possible short-term reversal. When you see this, you have to take the market long, manage your risk accordingly, and you could add a really, really nice rally to the upside, simply coming up with a level and gauging what the market does at that level of interest. And this was a very strong level because look what happened. And the day around 2 o'clock Eastern came into 3970, rallied, and then another third time, kind of like everybody's messaging me saying inverse head and shoulder pattern. To be honest with you, I don't really look at that much. I care about what the market's doing and how the auction is facilitating trade. We bounced off this level 3 other times. It could have provided nice other opportunities if you did not get long earlier in the day off of that analysis that I posted in the Discord. And now let's go over the pre-market plan on Thursday, March 9th, because the same exact levels were used. And now I'm recording this video, and I even explained how we were watching a bearish plan below 3977, 3970. Well, guess what happened? Today, we absolutely destroyed that level, and our bearish plan did come true. So the pre-market plan today basically called for the market to balance, and we were watching a breakout of balance. The two most important levels was that 3977, 3970 level. I wanted to play short. If we broke below it, targeting 3952 demand. Also, scenario number 2, we had a key level at 4015, 4020, an area of sellers. Before the market opened up, I adjusted it, I edited it, and we had supply that I just found at 4007 to 4015, which I expect to be tough resistance. And even the plan from yesterday, we were watching this same exact level, 4015, 4020, to find sellers, to play the market short, and using the demand zones below as a take profit. Now, where this level came from was on Tuesday, March 7th, when we had that sell-off below that 4053 level. Remember how I explained it in the beginning of this video? Well, during the middle of this day, there was some selling activity around 12:15 to about 1 o'clock Eastern that formulated this seller activity. If you go back to the tape, you replay this data, you will see exactly what I'm talking about. And then fast forward to today, the market opens up, we start rallying higher. I could not be long, still below 4007, 4015, and 4020. If you were watching the tape, at this moment we began to rally. There was a 2,700 lot sell order that completely wiped away all the liquidity in the market around 10:07 Eastern. So now the market rallies up. we find a larger passive seller at 4020. The market starts moving down, and at 1007, we see a very large aggressive seller taking liquidity from the market. That is when we get the sell-off down. And remember where this seller came in. Just to go back over here, this guy came in around 4014, 4015, this large red bubble over here. Now, if we fast forward, after 1007 Eastern, the market rallies. Guess where we rally into? Number one, back into 4015. Number two, exactly where that large 2700 lot seller was at 4014. So now you have multiple confirmations, reviewing this chart after the fact, to take the market short at this level, putting your stop loss above the high, and you could really target 3980, 3977, depends on your trade, how you trade, and your risk management parameters. But the tape was very, very heavy. Then, if you did not short at the highs according to those levels, when we broke 3977, look at the volume, look at the aggressive selling, and you could have played it short targeting 3953. You could have got a nice 20-point sell-off off of that. No one was expecting the market to sell off this lower, but it was an all-day sell-off where we put in lower lows and put in lower highs, very similar to Tuesday's action. So guys, take my advice, create levels and play levels. Review what the market is doing at those levels of interest via order flow, and it will give you key insight about the market activities. I want to say I will be adding very soon a section to the course about how I come up with these levels, live trading scenarios, drawing them, why I did it, and then some other order flow tools and strategies. I'm also going to be upgrading and adding some features to the Discord as well. So definitely check out the links in the description below. Drop a like on this video, comment if you have any questions, and I'm going to end it on that note. Peace out.